Good morning, traders. Sorry about the delay. Um, Thanks for joining me today here at 8:06 a.m. Chicago time, daylight saving time. It is episode number 2433. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's just jump into our pre-market summary sheet here. We're back in business here at the office. This morning, what do we have? We have the market bouncing up mainly because some of the concerns about the banks have been kind of rectified. Jamie Dimon has been actively managing this First Republic issue, and the market's a little more confident about what's happening with the bank sector. But really, I think this is technical. We'll look at that in a minute. Mild risk on sentiment this morning. Mild risk on the market's popping higher. We're 1% or better across the board, really, from prior settlement. So the S&P's at the 40-20, which we talked about yesterday, as a very likely push. 40-20, 40-50, if you recall. And that's it. Tomorrow we have our FOMC rate decision. The meeting starts today. This is a monumental issue for the committee, where they really need to figure out if they're going to hike rates another 25 basis points in March, as expected, or if they will pause already. If they'll pause already, as I talked about yesterday, we'll likely see the market at 4160 pretty quick in the ES. So they're going to have to do a lot of debating today to figure that out. We'll find out tomorrow. So today, most likely, unless we have some major news, which a lot is baked in already because the market is just an incredible machine at pricing in expectations. That's its function. And unless we have major news coming across today, your expectations should be tempered for what the market's likely to do. So this is what we have. The German zoo and the Canadian inflation lower than expected. JP Morgan reportedly leading efforts to help shore up First Republic. First Republic is the bank du jour. U.S. officials examining ways to permit FDIC to temporarily insure deposits beyond the current $250K cap without the need for congressional approval. They can do so, I think, on a one-off basis, but they can't do blanket insurance without an act of Congress. Amazon announced that it would cut 9,000 jobs yesterday. Further jobs and tens of thousands of Credit Suisse jobs are likely to be cut. Credit Suisse is just the sacrificial lamb for the current rotation of banking disasters. So that's where we stand. It's incredible. Credit Suisse, man. So that's where we are in terms of what's ahead. Existing home sales at 10 o'clock, and we have a 20-year bond auction for $12 billion. Not too much. And then after the close, we have the API crude oil stock change. The S&P this morning, another multi-distribution day. Pull it up. Another multi-distribution day. Point of control at the upper end of the range. The high is 40.1975, very significant at 40.20 temporarily. The range has collapsed. If you remember, yesterday it was 81 points. Today, 38 points, and that's not a surprise again because we expect that the market will likely not want to commit before tomorrow's number, right? So 38 points, which is pretty decent. Remember, the mode over the last 252 days, which is 1 year of trading, the mode, or the most common amount for at this point in terms of range, for the overnight session is 31. We're 38, so we are well within what we would consider normal. So that's where we stand. The The volume's a little bit light-ish compared to the prior sessions, 221,000 traded so far. And the inventory is 95% long. Essentially, we opened, we tippity-tapped the prior settle in the overnight session, and we haven't looked back. So 95% of the volume is long. Pay attention to Bitcoin and Ether. They have been ripping higher, pausing today, but Bitcoin is back at 28,000. It has taken the lead since this banking crisis started. So that's it. I want to briefly look at what we talked about yesterday. Remember, yesterday's main scenario, if you recall, is we have to pay attention to 39.70. If it takes out the 39.70 and stays above it, it is very likely to push through to where you see the circles. First, 4,000 right here, 4,000, and then 40.20. 40.20 brings us back to the edge of this weak structure. 40.20 has been played with quite a bit over the last week or a couple of weeks or so, and it's the high of the session. Later in this broadcast yesterday, again, I outline what I'm expecting. Here it is. This is from yesterday's show. 39.70. If we can hold above the 39.70, we're likely to attack the 4,000, and then 40.20 above there. Those areas are key. 4,000, 4,008, and 40.20 are key. Here's what we've got today. So this is today's view. Let's load this data real quick. This is my trigger chart or active chart. Yesterday we open at 54. We go down and do this, as I warned, the 39.50s in play, the mid-century. We go down and test down and get down into 46, 47, and then start moving up above to form the IB, and then we hold steady. Once we have an IB extension, we start to look for, okay, what will it take? Note that we hit the 70 early on, right here, pulled back, went to 70, put in a weak high. Sorry. Hello? Can we clear? One second, let me clear this. It's not clearing. There you go. We put in a weak high right here. See this? 70, 70, weak high, break, pull back to the 70. And the idea, remember the long was what we're looking for. We get down, we get up above 85, we get to about 86, 75 or so, and it ends up falling through, kind of destroying that trade initially. So from this point forward, nothing is done until we get back above again, and then we end up getting back above on the close. And then today it decided to go ahead and get the job done. So in the overnight session, but what you're seeing overnight is exactly what was outlined in the prior video of what's expected. And here we are battling 40.20. You could see the blue dots there signifying offers being lifted. So let's look at the order flow screen. So there's the blue dots right here. There's a fight up here, and the market's really squeezing that 40.20 area, squeezing the 40.20 area and seeing some resistance in the form of resting orders. So there's size kind of coming across and lifting. Okay. Why is this not clear? Escape. Okay. So that's that. Bigger picture. Here we are. Bigger picture. Yesterday, inside day versus Friday, weak high close, and then we end up not getting through the 39.99 and pushing through the 420. Here we are at the 420, the single prints from the Thursday of the SVB news. So from here, it really is about pushing through, consolidating in the zone, and then most likely squeezing to the upside, depending on what the Fed does. So 40.90 is next. 40.90 is the next key test area. So the job is being done just as expected yesterday. Scenario one in play, but very difficult to hold. I made some comments in the Convergent Trading Mavens channel yesterday as we were discussing the market. It was really, really difficult to hang on to longs yesterday. It was just such a terrible grind. Once, we had rollover last week. Oops. We had rollover last week, and we had rollover last week, which is always going to be an issue, and then today we have FOMC. So once the FOMC gets cleared, the expectation is we're very likely to just kind of loosen up and squeeze through, and I'm expecting it to push to the upside. The market's already priced in the worst of it at the moment. What else is there? Inflation has clearly capped out and is still high, but is falling. The dirt on these banks is out. What other contagion issues? China has reopened. There's a risk overhang with China, Russia, this visit that may trigger some sanctions against China if China decides to send drones or whatever. But economically, macroeconomically versus geopolitically, there isn't much holding this market back from a bounce. This is really the reality of it from where I sit. This is how it looks. So that's where we are. Let's clear this out and look at what's expected for today. So what's expected for today? 95% inventory. So I'm looking for an open auction that squeezes the high for the overnight stat. I expect it to pull back. I'm looking for this thing to pull back to 4,000. Last week's high, 4,000. I expect there to be a battle done here, and I expect it to consolidate between 4,000 and 40.20. That's not enough range to go from 40, 22, 23, or 25 to 4,000. But I expect a lot of today to be a consolidation unless it just decides to squeeze. I'm leaning more long than short. There's quite a bit of support underneath us. If it fails through the 4,000, then I'm going to be looking. So let me change colors like I used to instead of confusing you with the same color. So let's look at the secondary scenario. Where's my color for the secondary scenario? Let's use that. Secondary scenario would be an open auction that squeezes higher. We have an impulse down, pushes to 4,000, and then starts to break through. On the pullback to 4,000, we're looking for a short for a gap to settle trade back to 39.83. So that's about 17 points. And then for it to consolidate against yesterday's point of control at 81 and then hold steady here before the Fed announcement tomorrow. That would be scenario two. This is scenario one here. This consolidation and an afternoon squeeze to the high side is what the market's likely doing. So that's how things are shaping up. In terms of what we've got in crude, which crude oil has been pretty interesting in that it has been consolidating. Yesterday was an inside day, and what it did yesterday is it opened right against Friday's close, and it tested remember I drew a box down here yesterday like this. What it did is it tested the edge of that box down here at 66. It tested that, it busted through by a little bit, and then it came right back up. And what you had is a bull run on the close, on the settlement of crude. So in the last half hour or so, it just squeezed higher, very bullish close. It still had an inside day. It still had an inside day. Let me get rid of this pinkish red color and go back to yellow. It still had an inside day, but quite a bullish close. It closed on the extreme after it was a neutral extreme up day, NEU, a neutral extreme up day, and now we're contending with a gap which the market is being responsive to. We opened just now and we are responding back into the gap. The expectation is a gap to settle trade here, consolidate, and then come right back to where it opened and hold sideways for crude. Crude is trying to stage a rally from here. Of course, it's also waiting for whatever the Fed is going to do next. So that's where we stand. Anyway, hopefully you find that helpful. Good luck today. Don't forget to hit the like button. Don't forget to click on the subscribe link pinned to the top. Is a link that gets you to subscribe to the channel directly. Subscription is free. Subscribe to the channel to help promote the channel. This is your contribution to what I'm doing, is to help promote the channel, help other traders find us, and think of the market as a much more holistic machine than price action alone or algo, liquidity sweep, whatever stuff. Look at the market as a big machine that is generating ticks all day in the pursuit of finding value. Good luck, and I will catch you tomorrow morning. Take care.